bit more on Portugal, and joining me now is Jonathan Lemco. He's a sovereign credit analyst at Vanguard Group. Vanguard oversees about $1.4 trillion in assets, of course, a huge player in the markets. And Jonathan, you know, the fact that the EU leaders have met over the last 2 days and the fact that they have not offered any financial assistance yet to Portugal tells you what?
It tells me that the Portuguese themselves are divided as to whether or not they're going to seek a bailout or not, what they should be doing going forward. There's a lot of uncertainty within Portugal, and that in turn is being transmitted to the EU leaders themselves. Now, I think the likelihood of a bailout eventually is very high. But in the meantime, we've got a lot of uncertainty, and our market is in turn responding to that. Well,
does Portugal have enough money to get it through its short-term debt obligations?
Yeah, between now and end of June, early July, they need about 14 billion US. They probably have that. But more broadly, they're going to need a lot more than that, particularly in the fall when they have a lot of maturities coming due.
Right.
That's when they're going to need what is rumored to be about $99 billion.
And does that
here's an additional...
No, go ahead.
I just want to mention a quick complication. Normally what the credit rating agencies do, particularly for an investment grade credit, isn't so important. But the reason it really matters from yesterday is because when S&P took down Portugal 2 notches to a BBB, and they put it on a negative outlook and said they would revisit this just next week now, that means they're very close to junk status. And if you run a dedicated fund, which includes Portugal, you might be forced to sell now if you think that Portugal is going to be a junk credit and your mandate is investment grade. That's a big problem from a perspective of Portugal.
What could happen then? What could happen if that did in fact happen as soon as next week, Jonathan? Does that mean that you would see huge outflows out of Portugal?
I wouldn't say huge, but you'll certainly see substantial ones. If S&P takes them down one more notch, they'll be BBB minus. That's still investment grade, but it's on the cusp of junk. And so you're going to see a lot more questioning within the investor community. Should we hold on or not for now? Everybody will be watching Moody's to see what they do as well. So the point is it's very dicey, it's very uncertain, and although I don't see a huge outflow, a lot of the selling's already happened, I do believe it is going to continue at some pace.
But doesn't that then, Jonathan, become, as we've seen with all of these countries like Greece and Ireland, a self-fulfilling prophecy where if you see a downgrade, let's say to junk status, then those yields on those Portuguese bonds go up. They're already, what, 7 to 8% on the 2 and the 10-year. That's going to increase their borrowing costs, and that's going to increase the likelihood of a default. No?
Absolutely. Absolutely. They're approaching 8% now. That is simply unsustainable in the medium term. They can manage this for a few more months, but that's it. So they're stuck between a rock and a hard place. And the sooner that I believe the sooner that Portugal accepts a bailout, the better, because at least then we can put this behind us and move on. Ireland and Greek spreads haven't widened out that much more since they also chose to accept help. I think it's inevitable that Portugal will have to do so. Let's get this over with. I understand it's a loss of face, really.
Right.
It's a pride issue, and that's very difficult. I'm not going to diminish that. But you know what? You got to move on.
So, Jonathan, in your view, then, what's their time frame? What's their end date then to get this bailout?
Muddle through until June, July. Presumably, we see a new government then. Best guess now, but it's just a guess, is we're going to see another coalition. That coalition, I suspect, is going to accept a bailout soon after that, and then, you know, the risk of a restructuring is still there, but I do think it's less than 50-50. Okay. Portugal's situation is much better than Greece's.
Okay, Jonathan, thank you. I appreciate it. Jonathan Lemco, the sovereign credit analyst at the Vanguard Group, which, as I mentioned, oversees about $1.4 trillion.